and thank you for joining us today. My name is Gillian Hammer. I am the Group Chief Marketing Officer at DataBank. With me today is Efua Mensah Bonsu. She is DataBank's Senior Research Analyst in charge of equities, and she will be talking to us today about how the market has done for the first half of 2019 and what we can expect for the second half. So Efua, welcome.
Thanks, Gillian.
We'll get right into it. And my first question is, how has the stock market performed this year so far?
Okay. The equities market of the Ghana Stock Exchange has had quite a difficult first half of 2019. It started off on quite a difficult note. For the first quarter, the benchmark index recorded a year-to-date return of negative 4.58%. The second quarter was a little better. We saw a quarter-on-quarter loss of 2.4%, which puts the year-to-date half-year return at 6.9%.
What would you say are the main drivers of that negative performance?
Okay. It's noteworthy to observe that the listed companies actually performed quite well. But then Ghana faces a situation which is peculiar to emerging markets around this time, where we've seen foreign investors pull out of our capital markets. So with the increase in the Fed's rate in the US in 2018 and expectations of further increases this year, we saw a lot of our foreign investors disinvest from our markets. They also had some concerns about the stability of our currency, and then there's also some concern following the exit of the IMF in April, whether we'd be able to stick with the recommended guidelines and targets, and also whether our market will continue to be stable as we get closer to the election in 2020.
What impact do you think investor confidence also has on the performance of the stock market? So does that have to be factored in as well?
Yes. So the foreign investors had lost confidence in our markets. Basically, that's it.
And my understanding is, the foreign investors have lost confidence. They used to contribute a significant portion to the market. That has gone down. So now you find that there's more pressure on local investors for the stock market. Are we finding that the local investors then have confidence that is required to boost the stock market, or is there also a lack of confidence there?
There really isn't much. There isn't really much of a problem with the institutional investors because they look at the valuation of the listed companies, so they know which companies are good. And they know that even though the prices are going down, these companies are good and have the highest probability of rising faster when the stock market picks up. The problem usually is with the retail investors who would just be looking at the price movement and might not have the technical ability to look at the valuation, the core worth of the stocks.
Okay. So as we look at the second half of the year, what sectors do you think will drive performance?
Okay. Based on the current performance of the listed companies, we think the fast-moving consumer goods sector, the oil marketing sector, the banking sector, and the telco sectors are key areas to look at. So far, looking at their half-year performance, most of the listed companies in these sectors have recorded a year-on-year improvement in bottom line, and we anticipate that there will be stronger performance from them in the coming quarters.
Okay, so Efua, with a half-year performance of minus 6%, last year didn't end too well for Ghana's equity market either. My question is now a good time to buy? So what should investors do? Should they sit and wait, or should they buy?
It's a good time to buy because currently a lot of listed stocks are trading at very attractive valuations. So it's a good time to buy, but I would recommend that you contact an investment advisor who would help you to select the good stocks that are currently well priced so that you have a greater probability or chance of recording higher returns.
Okay. Any final words?
Yes. The stock market is for the longer term. So anyone who has some funds that they wish to put aside and would like to record some growth in it, I'd recommend that now is a good time to get into the stock market. It's always best to get in when the prices are low, because it's still the same company, rather than to wait for the prices to go high, and then as it's going up and everyone is chasing the same stocks, then you'd end up paying more for the same stock.
All right, Efwa, thank you very much for your insights today. We didn't spend a long time, but to our listeners, if you would like to get more updates from our research team, you can visit our website at www.databankgroup.com. And we wish you a wonderful day, and you will hear from us again soon. Thank you.